in our conversation when we were doing the cold open, Johnny said something that was really interesting where we talked about the drivers, of these companies. And when you think about sectors or industries, traditionally we've seen those get bucketed by drivers, right? So they share similar things in common, whether it's, some sort of exposure to, this type of commodity or this type of demographic of customer or consumer. And with digital asset companies that are going public, you have this dichotomy between, let's just say, like a Coinbase, which probably shares a lot more in common with traditional crypto as far as the interest rate and monetary policy impulses in the economy. And then you have the opposite with a stablecoin issuer that tends to benefit, if interest rates rise. So it's like there's a bit of like a diversifying driver within the industry itself. And so I was just thinking, it would be kind of fun, the next time. Well, it's never fun to be in an interest rate hiking cycle. The common grievances of an interest rate hiking cycle is that if you are a banking consumer, you don't get to participate really in higher interest rates in, say, your checking or savings accounts. Usually the banks kind of keep them relatively flat. Well, now with these stablecoin issues coming to market, I suppose that you're going to see rising rate trades surrounding stablecoin issuers in the future, because they have that driver of increased margin expansion with the rising Fed funds rate, right?